Hello, my name is Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial futures. This is our Forex Technical Analysis trading plan for Thursday, July 7th. Before we begin our video, we'd like to always start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what level of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any decision you make is solely your own responsibility. Trade it at your own risk. As we said, this is our fourth technical analysis for Thursday. In each of our videos, we try to review the prior session's price action to come up with key support and resistance price levels. We'll look at the gold chart to see if there's any leading sentiment. We'll come up with a low volatility watch list, an inside bar watch list, and we have an education spotlight at the end. As always, please send your comments and feedback to contact@dmbfx.com. As always, we are going to start off with the gold chart, and where we left off yesterday was this run to the 20 moving average, and the question was, and by running to the 20 moving average, we closed above this key price level, and the question was, would we continue to run up to test the last key price level? And of course the answer right now is yes, we did. And what's also important about this is we have what? We had our push down on good volume right here. We had our inside bar on lighter volume, and then we had our break of the inside bar up, and both days after the inside bar we had an increase in volume. And we've been watching this for a couple of days. When will the buyer volume take over? I imagine it's going to be shortly. It is a little lagging as far as the indicator, but so we should see the green get above the red. But the important story here is push down, inside bar, break of the inside bar with volume. That is the classic inside bar trade right there. So now we have to make an assumption that we will probably eventually run all the way up here to our past resistance, which was 15.47 in that price level. We can see on our market profile that we have this vacuum right here. We came up on light volume, and we created another light volume area between 15.16 and 15.27. Also, for the past day and a half, we pretty much have been overbought. So eventually we're going to have to find that short. Haven't found it yet, and we're in the middle of a key price level. And we can also see that with our light volume. So the question will be, if we continue to get volume, we'll probably retest to 15.47. Otherwise, certainly we're overbought and we need to find that short. So strong gold. Let's see what that does to our dollar. We're starting off with the pound dollar, and we continue to move in our downtrend channel. We found resistance at the 20 moving average. We broke through the 200 moving average, and now we went right down to our previous support level. And what's important about that is that's where buyers found value. So once we came over to our hourly here, and we saw that price reached our place of value, which is around 1.59 in that range, 1.56, 1.6. They brought it right back up. So what are we seeing? Well, we're still seeing selling volume increasing and having control here. And we see that we had an increase in volume. We had about 4 or 5 days of light volume. So there's a theme. Our theme yesterday was low volume and at parity. So right now we can say our theme is increase in volume. As we come back over to our hourly, we can see we did push into some buy zones. We did push away from our long-term moving average, but we've come back. We can see clearly the dollar is in control, so the dollar's moving with gold. That's certainly interesting. And we have a divergence. Dollar's moving up, the pound's moving down. A little hookup here the last hour or so. We did get a leading indicator of as we came down into our buy zones, and we did get our extreme level here that gave us a heads up that a buy was coming. So that's great. But again, we can really see right here that divergence of the dollar. So with the dollar being stronger, we could see this push lower. And what's interesting is two things. As we came off of our our downtrend line. We pushed back up, couldn't reach the top. We pushed up again, couldn't reach it. So it does make sense that we probably will, as we extend this out, reach our downtrend line here. Switching over to the euro dollar. And here we can see our downtrend line, and we have an uptrend line we're watching. So we're entering into a wedge. Buyers have consistently found value in the right here. So which will match up if we continue to come down. Certainly around here, which is about the 1.4, 1.41 price level. This is where we're getting the wicks. We've got a wick here. We've got buyers finding value here. Punch through it. We punched through it, but buyers found value. Buyers found value. Buyers found value. So that's something we're going to watch as we potentially keep going lower. Why would we keep going lower? Well, once again, the dollar is strong, and we're seeing another divergence here with the euro dollar, as we saw with the pound dollar. So what are our themes? Again, increase in volume, dollar is strong, so we're seeing the pound dollar and the euro dollar head lower. That puts us far away from our long-term moving average. It puts us into a buy zone, where there certainly could be an opportunity down the road. And you can see the euro breaking below the long-term moving average here, and the dollar moving above it. So certainly it's something to watch as we watch where buyers in the past have found value at this 1.4155 price level. Finally, we have the dollar franc. Here, we've been watching the long-term downturn move. We've been watching the support at 0.8318. And we seem to be consolidating to the side. Now, why is that? Well, as we come up to our hourly, we can see we're close to a long-term moving average. We're in the neutral zone. But more importantly, we can see we have a marriage here. Who's in control? Well, technically, the Swiss is in control. Green is above red, as we see down here. But they're both above zero, and they're both, heading upward. So because we have a marriage, a harmony of the dollar and the franc, we've had this sideways action. So eventually somebody will take control and we'll get a move. We just have to wait for that to happen. As we move to our low volatility and inside bar watch list, we currently are not watching anything on our 1 hour Bollinger Band low volatility watch list. We don't have anything squeezing or pinching. For our inside bar, we're going to be watching the dollar yen. And hopefully we'll put together a video for you guys on what we're referring to with the inside bar and low volatility watch list. But basically we're going to be watching the high and low of today's bar for the dollar yen and watching for a break of price action outside of that range. Which gets us straight to our point. We've been talking about what separates winning traders and losing traders. And yesterday, we talked about winning traders have a plan. They know why they're trading. And today, we're going to take that to another step. And it's not just knowing why to trade. It's about knowing when to trade. And successful traders trade because the odds are in their favor, not just because the market is open. They lower the playing field and get the odds in their favor by trading with the trend, by having a defined setup, by confirming what they see, versus trading just to trade. Oh, look, I'm trading. So it is as important it is to know what you're trading, having a defined system, having a defined setup. It's also important to know when to trade, letting that setup come to fruition and be confirmed. You don't jump the gun, you don't anticipate, you trade because your system says to trade, and you don't trade just to trade. And that really talks about the philosophy here at DNB FX. We're not about fluff and not about trying to hype and mislead any of our viewers. We have focused, disciplined trades. We trade because the odds are in our favor. It's all about high probability trading. Thanks, guys, and I'll see you next time.